Hi everybody, Ken Heinz here, HFR President with the update for the Global Hedge Fund Industry Report. We talked in the last video about how the strong HFRI performance has continued for the past 9 months. And as a result of that strong performance, we saw hedge funds total assets reach a record high to conclude the second quarter of 2021. Total hedge fund capital reached $3.96 trillion in capital, an increase of $160 billion over the prior quarter, and getting ever more close to the historic milestone of $4 trillion, which we do expect the hedge fund industry to exceed in the second half of 2021. This also marks an incredible turnaround in the last 5 quarters. Recall that right as the quarantine started, total hedge fund capital fell below $3 trillion, and since then you've seen a recovery which is nearly $1 trillion of recovery. The second quarter also marks the 4th consecutive quarter of inflows, with total net new capital inflows totaling $12 billion for the quarter. Also tying this back to the previous video, we've seen a shift in the macroeconomic drivers of hedge fund performance in the last month, whereas most of 2021 up through June was middle of June have really been driven by this reflation reopening trade. In the last month, we have seen a reversal of that trade, and we've seen interest rates fall. The good news is that we've seen strong hedge fund performance through both market environments, showing that funds are really tactically positioned and able to adjust to and navigate the current volatility that we have been seeing. While it's been exciting that Equity Hedge and Event Driven have both surpassed $1 trillion in total capital in the prior 2 quarters, what's exciting is that for the third quarter, relative value arbitrage actually surpassed $1 trillion. So 3 of the 4 strategy areas are now in excess of $1 trillion. What's also exciting about the second quarter is that we saw inflows led by macro and relative value strategies. And as you know, macro strategies are generally the ones that are least correlated with other market indices. The recovery of the hedge fund industry from the drawdown which occurred at the beginning of the quarantine has been the strongest recovery on record for the hedge fund industry. As you can see here, so that was also the time when assets fell below $3 trillion, and now they're very near $4 trillion. And you can see that if I compare the performance 6 months and 12 months from the lowest point of the trough of the drawdown, you can see here that the recovery in this period was about 33%, which is the strongest performance for the HFRI 1 year after the bottom of a drawdown. So it has been a very strong recovery for the hedge fund industry. All of the slides that you see me talking to today are available as part of HFR's Global Hedge Fund Industry Report. Please reach out to your HFR contact if you'd like to subscribe or renew your subscription to the report. Finally, in addition to the information included in the Global Hedge Fund Industry Report, there's a lot of great information on HFR's website, including the Investor Guidebook, which has great information on how institutions are using HFR's investable indices and how they're used as solutions to common benchmarking problems. You can always send us an email at info@hfr.com or indices@hfr.com. And of course, there's a lot of great information included on this YouTube channel. Thanks, and we'll see you again next month.